More than ever, we learned last year how entwined the federal fund rate and mortgage rates are. However, if you were paying attention last month, you'll notice that even though the feds have been increasing rates, and they increased rates last month during the banking turmoil, mortgage rates actually came down. How does that happen, and why did that happen? Let's dive in. I think we can all agree that in terms of magnitude, the Silicon Valley Bank failure was a pretty big deal, especially when compared to the 2008 housing crisis and the bank failures that were going on then. Fast forward to today. This graph is a compilation from the Mortgage Banker Association and Freddie Mac. And as you can see, the 30-year mortgage rates, there is a distinct decline in the graph in the month of March, which is right in the heat of the banking turmoil that had a lot of us at the edge of our seats wondering what was going to happen. If you recall, the feds actually raised their federal fund rate. Instead of doing it by 50 basis points or 0.5%, they raised it by 25 basis points or 0.25% in the midst of the banking crisis. So how is it that they raised the federal fund rate, but mortgage rates actually came down during that time frame? What happened was that a lot of investors were rattled, so they stampeded towards the relatively safe and security government bonds, which is somewhat ironic, being that those are the instruments that were causing the issue. So with interest rates high and economic uncertainty looming, bonds were actually still the safest place, the safest asset to park their money in. So we had a stampede of investors pulling their money out of whatever instruments they were in and sticking them into safe, secure treasury bonds. The result was that this pushed up bond prices as there was a flee to safety. People were buying up bonds in a massive amount, which forced the bond price up, which tends to lower rates because when bond prices go up, rates and yields come down. So that's why those yields came down even though rates were going up, because we had an influx of buyers into treasury bonds. So what does that mean moving forward? Well, my crystal ball is still on back order from Amazon, but the feds appear to be toning down interest rates hike. As I mentioned, they wanted to raise it by 50 basis points. They only raised it by 25. Mortgage rates could plateau if they decrease their rate of increase, and especially if anxious investors keep buying bonds, keep their funds in those treasury bonds because they want their money to be safe. This will provide a much needed reprieve to buyers as it balances out interest rates, or maybe causes it to decrease even more. Because as you know, rising interest rates have diminished the purchasing power of buyers or pushed them out of the market altogether. The bottom line, so you'll see a slow and gradual outflux of money from bonds back into more risky assets as they want to get more returns and less safety. So if the banking turmoil settles, we should see pretty much confidence be restored within a quarter or so. While that's good news for the industry, newly confident investors will likely start selling off their bonds and putting their money back into more risky assets that's going to give them a higher yield or return. So we'll see a flow of funds out of treasury bonds. If money is flowing out of treasury bonds, that's going to push up yields, and therefore that's going to push mortgage rates back up, which is going to make it more difficult for buyers. If the banking turmoil persists, the flight to safety will continue, and we'll see that counterbalance force as bond prices are pushed up and yields are pushed down. So we'll see over the next quarter or two what's going on with the banking turmoil and how that's going to affect bond rates and mortgage rates overall. If you are looking to buy and finance a real estate purchase, right now might be the best time for you to finance a real estate purchase, because the feds will continue to hike interest rates to slow down inflation. So right now might be potentially the lowest rates of the year if that continues to happen. If you have any questions, there is my contact information. Feel free to email me or you can go to our website, click contact us, send us an email, and we'll get back to you as quickly as possible. I also post a lot of these videos on Facebook, so go to Facebook, go to our page, and like it, and then we'll see you on the next video. Thanks for stopping by.